Hello everyone, this is your boy is back here and welcome to Swing Trading 102. All right, this is the second series of a 3-series lessons whereby we are indulging ourselves in what is swing trading. Okay, in the first part, if you've not watched the first part, please make sure that you watch the first part before you come and watch this one. All right, the first part is Swing Trading 101. Okay, what beginners must know about swing trading. Okay, make sure you watch that first part before you get here. All right, in this second part, we are going to take the time to go on the chart, all right, to identify some swing trading setups, all right, in different scenarios. Okay, then at the end of everything, I will show you my swing trade that I've taken myself and you will see how they are working. All right, and I'll show you the idea behind, the mind behind. All right, then in the part 3 of this session, we will dive into maybe 2-3 strategies, approach as to how to find a swing setup, which we will see a part of it in this one, and secondly, build a strategy around it, okay, so that you can use it as a form of investment, okay, as an investment vehicle, like I like to call it. So guys, having said that, I won't waste much of your time. Let's get right straight into the video. Okay, okay guys, so let's go right straight on my desktop so that I will show you some different setups so that you can see how swing trading is. All right, the setups and things like that. Okay guys, so here we are on my desktop and I want to ask you guys a simple question. Okay, so the question is, what time frame are we on right now? For the smart folks, they might be able to do something to understand which time frame we are on, but if not, guys, it's almost look neutral. It's very hard to tell which time frame we are on, because guess what, the same trend that you trade, the same trend strategy that you trade, all right, now I asked you that question. Okay, I asked you that question, and you may want to pause the video and answer me in the comment section, okay, as to which time frame we are on. But then I asked you this question, okay, because the idea of swing trading is more or less around this concept, which is what you are trading in the smaller time frame, transition that same style into a higher time frame. Okay, so now what we are going to tap on right now is what are considered in trading the higher time frames and the smaller time frames. Okay, because this is where everything changes. Okay, so in trading, the higher time frames are from H4 upwards. Okay, we can add even H1, but it will depend on what exactly you are doing. All right, so we will leave H1 in the middle. Okay, and the higher time frames are H4 daily, weekly, and monthly, and the smaller time frames are M30, M15, M5, and M1. Okay, so for anyone that is doing day trading or scalping, they are, for the most part, they are playing on these time frames, these smaller time frames. Okay, the M time frames. Okay, and most of the time they stretch themselves at max to the H1. All right, and for those that do swing trading and position traders, all right, swing trading and position traders, okay, the position traders are those that wait in the market till infinity, the infinity war. Those are the position traders, all right, but we don't want to go that far. We are swing traders. Okay, so the swing traders and position traders, they trade for the most part in H1 daily, weekly, and monthly. All right, but for swing traders, okay, to be more, we are trying to niche down, okay, to narrow down. So for the swing traders, we mostly play around H4 daily and weekly, full stop. If we will need something in the monthly, then it will depend on your strategy. Maybe you just need a candlestick confirmation in the monthly. But other than that, for swing trading, we don't look at the monthly that much. We focus on H4 daily and weekly. All right, good. So now that we know where the time frame on which swing traders focus on, what we want to do is, as I told you earlier on, we want to transition our strategy that we do in our smaller time frame. We want to transition it from the smaller time frame to the bigger time frame. The only difference between in this transition is that in the smaller time frame, things happens fast. All right, but as the higher time frames, as they describe themselves or as they suggest themselves, H4, 4 hours daily, daily, weekly. What does they mean? Or what do they mean? Better put, they mean that you're going to see the results at the end of 4 hours in different 4 hours consecutive time. You're going to see the results in daily after some days. You're going to see the results in weekly after some weeks if you're playing in the weekly. All right, good. So let's transition. Let's find a simple example in the smaller time frame, and let's transition that same idea in the bigger time frame, and let's see if it will work. All right, then from there we start to identify some setups, okay, in the higher time frame, okay, because that is what swing traders we do. We identify our setup in H4, daily, weekly, period. All right, we don't need anything in the smaller time frames. Okay, the smaller time frame, there is something we do with the smaller time frame. All right, and that is where the tricky part is, and the interesting part is, and that is where cheats a lot of people, which is the entry. We will talk about it in the third series. Okay, so make sure you don't miss the third series of this video. So now let's go in the smaller time frame. So I will go to, let's say, 15 minutes time frame. All right, I'm on AUD USD. Okay, so the Australian dollar USD. Okay, now the concept of swing trading can be applied on any assets. The most important thing is understand the asset you trade in very well. Backtest it. All right, if you don't know how backtesting it or what backtesting is, I've done a video on that. Okay, if you want me to expatiate on it, make sure you put it in the comment section or DM me on Instagram. Okay, so now we are on 15 minutes time frame. Okay, and let's go back and look for. Now we will adopt two strategies here, okay, for the purposes of what we want to do, okay, and to save time, okay, but you can apply it to whatever strategy you use, whether indicators, RSI, or stochastic, whatever Bollinger, whatever strategy you use, you can apply the same thing in the time frame, in the higher time frame, okay. You just have to transition the concept, and that is done. Okay, so we are going to be looking at chart patterns, my favorites, and we are going to look at trend lines, my favorites as well. Okay, so let's identify a chart pattern in the smaller time frame, okay, and then we will go into the bigger time frame and ask ourselves, do we see or can we see a chart pattern in the bigger time frame as well? Okay, good. I want a clear chart pattern. All right, I want a clear chart pattern. I don't want one that played out roughly. Okay, so we can consider this as a head and shoulder, or we can see it as a double top, but I want a clear one. I want a clear one. Good. I like this one. I like this one. So look at it. Okay, double top. Okay, double top, double top, double top. Okay, double top. And what does double top says? Okay, the theory or the idea behind double top, you can do your studies, okay, on it. So double top says that whatsoever was consolidated in the during the consolidation phase, once the market breaks out of the neckline, it will vomit it. Okay, so this is what was consolidated. This is what we got in the consolidation phase. All right, you see this? Good. Then if you enter in here, I will tell you more about the entry. All right, just be patient. This is just basic. All right, but we will get more sophisticated when we get into the third part. Okay, so some of you that knows a little bit, you'll be like, oh no, man, why do you want to enter? There are layers, especially there are layers into swing trading that makes swing trading. That's why swing trading is so, bro, man, it's so beautiful, right? It's so beautiful. Now, when you're trading in a smaller time frame, you can do some of the things, some of the moves that you will do in swing trading. Okay, example is in swing trading, we can use sniper entries. But in smaller time frames, you see, we are on 15 minutes time frame. Things happens fast. All these candles will be created in 15 minutes. So after every 15 minutes, a candle will create. So it is very easy for us to see this. You see, anyway, we hit, this is the profit that we went for. Okay, this is the profit that we are supposed to get. Okay, and see, the market vomits it out. Okay, the market vomits it out. You guys can see that. You see this area. Oh, wait, I got the wrong one. See, the market gave it back to us. You see, the market reached this area. It got into this area 2 times, one here and 2 here. You see, so if you're trading this strategy on the time frame, if you're someone who trades chart pattern, double head, reversals, or continuation patterns, well, here is it for you. You just have to relocate that strategy on a higher time frame. Okay, so now let's look for trend traders. Okay, trend traders are like, man, after every 3rd touch, man, on the 3rd touch, man, I'm getting in the market. Oh, God being so good, we got one here. All right, so here we go. 3rd touch, right? After the 3rd touch, good. So market started to spike up. So move up 1. So let's consider this whole area as 1, first point, all right? Then it came down again, 2nd point, then it moved up and it came down again, 3rd point, and guess what? Now from here, this is where you make your entry. You see, at this point you press buy and it moves all the way up from here. You see, and the rest is history. You feel me? Okay, so now with this same idea, trend line, double top, or head and shoulder, inverted head and shoulder, whatever chart pattern you have, or whatever indicator based strategy you have, let's relocate the same thing to the higher time frame and let's see. Okay, so I will change this now, guys. I won't, you know, you can do your testing in all the other time frames, all right? And you see, like this one, we are on, you know, let's find good double bottom, all right, down, up, down, you see, then you see, maybe make your entry here and the rest is history. All right, so if you go through the charts, you know, you will find a good and a clear setup. All right, this one too, we can see it as a double top. All right, you see, then market breaks out, you see, then what was consolidated here, you see the market gave it back to you. All right, so we are in the 15 minutes time frame. Let's try and transition the same concept on the higher time frame and see if we can find double tops or trend lines. Okay, so let's go down. We are on H4. All right, you see, now look good. I think this one is good. You see, so for the trend, you see, so first touch, 2nd touch, and 3rd touch, then you see you jump into it, and the rest is what? History. Okay, so we've proven it on H4. Let's go on daily and let's see on daily. Let's see what we can find on daily. Interesting. Double top, you see, up, down. Isn't this what we found in the Australian USD, right? You see, so now why are these patterns showing themselves over and over? Why? Because you need to understand that the market is run by human beings, and humans' emotion, human reactions are repetitive. Okay, so that is why we tend to see these actions over and over and over. You see, so you see, you have this calculation, you go in for your profit here. This is the profit margin. Okay, so then this is what you're going for. Then here is it. You see, the market gave it to you. So this is where you exit. Now, guys, where are we? We are on the daily. Okay, now the scariest part is how you enter. All right, but we will talk about it on another session. Okay, oh, this is interesting. Do you see that on the weekly we've seen? I just moved the time frame to a weekly, and guys, see, we have a trend line. Funny how it just came out. You don't understand me? See, first touch, 2nd touch, 3rd touch, what do? Then we sell. You feel me? So it's the same thing. It's the same thing in any asset you'll be trading. You just have to move your strategy from the smaller time frame to the higher time frame. Then you critique it, all right, just to make it work on the higher time frame. Okay, so that's the idea. Okay, so you find a setup in the higher time frame, then you build a strategy around it. That is what we're going to be doing in the 3rd session. Okay, so guys, having seen this, now I will show you my setups in which I'm in and I'm swinging. Okay, so I'll be in that setup for some days. All right, and this will bring us to the end of this session. Okay, so let me jump to my other desktop and show you my setups, the tricks that I am in right now with the swing trading strategy. All right, okay, so guys, here we are on my charts, and as you can see, we are on weekly. Okay, GBP USD, we are on weekly, and we enter into this setup. Okay, we anticipated a move. Okay, we see this setup to be a double top. All right, that from down to up to down to up. All right, Then we expect the market to go back down again. I will show you how in the third module, I will show you guys how you enter into this type of markets. All right, so this is it, and I'm swinging. You see, it's in weekly, and I'm swinging. I'm staying in this market till it gets down here. All right, then I can even go for more. There are extended versions, there are layers to swing trading. All right, that's why it's beautiful. You remember in the part 1 of this series, I told you that eat as much as you can from the market. Why? Because this can come all the way down here, but then eventually it can reverse totally and go to the other side. So as long as it's coming down, bro, man, I'ma eat it all. And when it gets down here, we will think of other plans. Obviously, as much as it gets down, I have a strategy that I call it God's wrath. All right, that's the name of my swing strategy. Okay, I call it God's wrath, whereby I have the head entry, okay, which is a sniper entry, and I have the shoulder entry, and I have the elbow entry, and I have the wrist entry. Okay, so yeah, if you want to know more about that strategy, DM me, okay, on Instagram, and I'll let you know more about it. All right, so this is it, and let's look at Euro USD. Euro USD, we are having it on H4. You see, we see head and shoulder. All right, and you see the market is going down. Here we are going in. We are going in for a risk to reward 1:4. All right, and here too we are going in for a risk to reward 1:10 or 12. You can see it, right? Because here is the stop loss, and here is the take profit. All right, a risk to reward 1:12. All right,
so this is just a quick video to update you guys on the setup, the trade that we had on Euro USD. All right, the swing trade that we had on Euro USD, which the setup was the head and shoulder. Yeah, the head and shoulder on the H4. All right, and as you guys can see at the beginning of the video, the one that I showed you guys, the market was around, I think, in this area. Yeah, I think it was around this area, more or less. And I made the entry here. You understand me? And yeah, guys, you are all seeing the results. The market went straight to take profit.
Guys, I believe that you did enjoy this video. I'll bring it to an end here, and I believe that you did enjoy this video. All right, guys, make sure you watch the next series, the third part, because we are going to build a strategy together, and I hope you did enjoy this video, guys. I will leave you here, and thank you very much for your time. And guess what? I will see you in the next video. If you didn't understand anything about this video, write it in the comment section, and I'll do my best to answer you, or DM me if you want to fast track your trading journey, or if you want to learn with me, DM me, and I'll make sure that I will help you. I'll give you all the info that you need on Instagram. Okay, you can follow me well on all my social media platforms. And guys, thank you very much for your time, and I'll see you in the next module. I go by the names back, and I approve this one too as well.